Thanks, Brent, and welcome everybody. Thanks for coming here on such a beautiful day outside. It shows that we're all excited about the same thing and what's happening in the market, and we hope that you follow Avino. We're growing, so we've got positive cash flow. Our flagship mine's in Mexico. The company's been around since 1968. It was founded by my father, and he built this mill in '74. It ran for 27 years. It closed in 2001 due to low metal prices, and then I became president in 2003, bought out the other half of the mine and reopened the mine in 2011. So we've had commercial production for the last 3 years, and we've completed 2 big expansions, which you'll see coming up in the slides. So Avino dates back to 1558. It's the very first mine ever discovered in the state of Durango by Captain Ibarra of Cortez's army. He claimed to have found a mountain of silver, and they formed the city of Durango to mine it. So the beauty of this is infrastructure. We've got a paved road to the doorstep of the mine. We've got local villages surrounding the mine, so people can literally walk to work up the hill, so it's not in some remote area. And we haven't had any banditos or anybody bother us because we're not out in the jungles. It's a really busy place that we're located. In the 1800s, Avino was owned by the British, and we had the special distinction there of having our own money, and you can see the coin there. So it was listed on the London Stock Exchange and had a market cap of £1 million. But this was one of the reasons why they had a revolution in the early 1900s to get rid of the foreigners. And this mine was destroyed, and there was no mining until we got involved in the 70s. Here it's located in the heart of Durango. It's literally a 1-hour drive from the city. So it's easy access. It's on the Sierra Madre silver belt. There's several billion ounces of silver that include past production that exist on this belt. So it's a very mining-friendly area. It's one of the top producing states in Mexico. And in Mexico, or in Durango, there's over 600,000 people, so we have access to every type of skill set. Here's an overhead shot. In geological terms, they call this a window. You see all our veins that are exposed on the surface. We're on what they call a volcanic caldera. To the west of us, right beside us, is La Preciosa. Corp paid $350 million in 2013 to buy out Orco. So it's a very prolific area. They have a couple 100 million ounces of silver. We have about 50 or 60 million defined in 2 veins. And you can see there's dozens of veins, all kinds of old workings on our property. But our idea was to get cash flow and use that cash flow to develop the project and keep our share structure intact. Here you can see our production profile. So we've grown at 115% last year. We hit 3 million ounces of silver equivalent. That's about 1.6 million ounces of silver, 7,000 ounces of gold, and about 4.7 million pounds of copper. We have 2 or 3 other expansions we're planning over the next 3 or 4 years, so we're hoping that we can double this number again. Here you can see in 2015 we did 19 million in revenue. Operating income was 8 million. We had positive earnings per share last year. Our cash cost is one of the lowest in the industry, $6.61 US, all in sustaining, $9.49. So we're one of the lowest cost producers. This is from the San Gonzalo mine. This is on our property. This is the mine we started with. We added the Avino mine in last year, and it's not quite in commercial production yet. We're just announced we started mining in April on Avino. So Avino generated quite a bit of revenue as well, but it's not classified as revenue yet until we declare commercial production, which is going to happen this summer. Here you can see consistently below $10 an ounce, and you can see the blue area is the G&A. We've got a lean operating team with plenty of experience. Some of the directors are in the room, and you can come by and meet us afterwards. Here you can see best in class of our peer group. So we were below $10 last year. I'm sure you recognize all the names there. And so cheap mining doesn't come cheap. We had to build a modern mining facility. We brought in brand new mining equipment from Sandvik and Caterpillar. So we've got state-of-the-art equipment. We've put $70 million back into the operation over the last 5 years, and it shows in our costs. Last year, we did a unique financing with Samsung. We're one of the first mining companies to do a deal with them. They gave us $10 million at around 5% interest, and it gets netted off deliveries. So we started sending our flotation concentrates to them, and basically our raw materials are going into their electronics. And they wanted to show the world that they're not predatory and they're trying to get rid of the middleman. So they offered us fantastic terms, and they're a great company to work with. And this was zero dilution of shares to the company. Key personnel, over 300 years experience. Myself, I grew up in the industry. I worked in the mine as a teenager, worked in the brokerage industry in the late 80s on the floor of the Vancouver Stock Exchange, and been the president of the company for the last 12 years or so. We've got a great team of people, and I can walk you through more of who these people are outside. Ross is here. Ross, you can see he's got a lot of degrees, so we've got a lot of smart people that help advise us. Here's a snapshot of the San Gonzalo mine. So it shows last year it did 1.2 million ounces of silver equivalent. The grade was just under 300 grams silver, about 1.5 grams gold. Good recovery rates in the high 80s, early 90s, steady state. The vein averages between 1.5 meters and swells out to 3 meters. So it gives us the opportunity to use two types of mining methods, shrinkage stope mining and then cut and fill, which is cheaper. Here's Avino. This is what we brought back online last year. So you can see the benefit of hindsight leading up to 2001, but last year it threw off about 1.8 million ounces of silver equivalent. It generated $21.5 million in revenue, although it's not classified as revenue yet until we declare commercial production, which is going to happen this summer. So if you add the two together with San Gonzalo, we did over $40 million last year. And here is the Avino mine that Captain Ibarra found 500 years ago. So the strike length is 1.6 kilometers long. The current resource estimate is the yellow area that we drilled from surface. Just to the left of the yellow, we couldn't drill it because the tailings pond's in the way. So you can see in the resource estimate is very robust. That area is 450 meters long and 50 meters wide. So it offers us the chance to mine it using a very cheap method. We're using long hole sub-level retreat caving, which is one of the cheapest form of mining, and it's stock work. So we can slash it out right to the boundary, so there's very little dilution when you're mining this. Here's one of our expansion plans. So the oxide tailings, when we open pit mined in the 70s and 80s, we had really poor recovery rates. Typically, oxide ore doesn't recover well under conventional milling methods. So we did a PEA, so there's about 40,000 ounces of gold, 6.6 million ounces of silver. This will give us another 1.4 million ounces of silver equivalent. And the base case used 2038 silver and 1256 gold, and it gave us a pre-tax IRR of 54%. Now, the capex on this, they estimate on a standalone basis is $29 million, but it's not a standalone operation. We have 485 people working for us right now. So we know that we can get this built for a lot less than that, and it'll add 1.4 million ounces of silver equivalent for 5 years. So we made another acquisition, so we were geopolitically diversified. We acquired the famous Braylorn mine. I'm sure all of you have heard of it. It's a very famous mine. It's got all the infrastructure, a small mill on site. We're waiting for the permits to reopen it, and we want to use cash flow in order to expand this operation as well. And if you look at the long section, it was made up of 3 mines, the King, the Braylorn, and Pioneer. It had the record of producing the rich ton of ore in Canada back in the 50s. 2,200 ounces of gold came out of 1 ton of ore. We're planning to mine in the gap zones between the mines. The Pioneer mine was owned by the Guggenheim family that ran ASARCO. Pioneer was listed on the New York Stock Exchange and paid dividends for 20 years straight. So it's a very rich operation. It's small right now, but a lot of upside potential in these gap zones. And we did some drilling in the gap zones, skinny widths, but we hit visible gold in a lot of the different intercepts, high-grade material. Last year we raised the dam, so we've increased the capacity of the tailings dam. We brought in new underground Sandvik equipment. And so our shares outstanding is about just under 40 million. There's 5 million US cash in the bank, actually more than that now. Trades on the New York MKT market. On Friday, we traded 500,000 shares, traded at $1.50 US. On the venture exchange, we're trading around 195 Canadian. Gives us a market cap of about 70 million Canadian. And that's it. Right on the button.
0.
Thank you.